Imagine dropping up to $1.4 million to build a luxury resort. You secure the prime real estate, you install custom waterfalls, you build out premium climate-controlled suites.
Sounds like a pretty incredible hotel.
Right. But now imagine your guests are going to chew on the furniture, pee on the floor, and you aren't going to put a single one of them in a cage at night.
Yeah, that is a very different kind of guest.
It really is. Welcome to the modern premium pet care industry. Today we are doing a deep dive into a very specific, highly sought-after franchise model called Camp Run-A-Mutt.
Which is such a fascinating model to look at.
It really is. It's a boutique dog daycare, boarding, grooming, and training facility. And for anyone listening who is, maybe looking at exiting the corporate world to buy a business, or even an existing owner looking to expand their portfolio, this is important.
Absolutely. It's essentially a masterclass in evaluating premium experiential franchise architecture.
Exactly. Okay, let's unpack this. Our mission today is to figure out the buyer psychology, the operational differentiators, and really get into the specific unit economics that make this franchise tick.
Yeah, and it is a really interesting space to deconstruct, especially when you look at how the modern consumer psychology has, fundamentally shifted over the last decade or so.
How so? Like, what's the big shift?
Well, the baseline for pet care used to just be basic biological needs, right? Food, water, shelter, maybe a walk.
Bare minimum.
Exactly. But today, the consumer is demanding premium experiences, high-level socialization, and most importantly, they want empirical proof of their pet's well-being. And Camp Run-A-Mutt has built an entire operational model around those exact demands.
Let's start right there with the operational model, because what they are doing structurally is, it's completely different from a standard boarding facility.
Night and day difference.
Yeah, they position themselves as the ultimate dog playground. And the core of that is this 100% cage-free environment.
Right, which is huge.
But I have to look at this through the lens of liability and logistics. Wait, no cages at all, even at night. How does that actually work without chaos?
What's fascinating here is the underlying canine psychology that the brand has tapped into, which completely flips that whole assumption on its head.
Okay, I'm listening.
So if you look at standard boarding models, isolating a dog in a confined space, especially in an unfamiliar environment, it drastically spikes their cortisol levels.
Oh, because they're stressed out and locked up.
Precisely. It triggers defensive behaviors, stress vocalizations, anxiety. But Camp Run-A-Mutt leans heavily into the behavioral science of how dogs naturally operate as pack animals.
So they actually want them together.
Yeah, their philosophy is that dogs actually sleep significantly better and much deeper in a pack setting.
So it's not just a marketing gimmick when they call it a pajama party. I saw that and thought it was just, cute branding.
Oh, not at all. It's cute, sure. But they are actively trying to replicate a natural pack dynamic to mitigate the stress of the owner being away. By removing the physical barrier of a cage, you remove that barrier frustration that often leads to aggression.
That makes a lot of sense, actually.
Right. The environment is designed to be open, which allows the animals to self-regulate and just kind of find their place in the room. And they argue that this reduced stress environment directly contributes to longer, healthier lives for the dogs.
But to address the liability point, this isn't just a free-for-all, right?
No, definitely not. Every single dog goes through a really rigorous temperament evaluation before they are ever allowed into the pack.
Okay, so it's a highly curated population.
Exactly. It's heavily curated.
But even with a curated population, dogs are animals. They're unpredictable. So who is actually managing this overnight dynamic while everyone is sleeping?
Well, that is where their labor model comes in. There is 247 human supervision.
Like awake staff.
Yes, awake staff. This is a non-negotiable in their system. There are trained staff members physically inside the room with the dogs around the clock. The dogs are never, at any point, left unattended.
Wow, okay. That brings up another operational layer, though. You have 247 staff, and you also have their signature technology, which is the Muttcams.
Ah, yes, the Muttcams.
Yeah, these live streaming cameras where a pet parent can log in from their phone and just watch the facility in real time. It's unfiltered transparency.
Total transparency.
But, anyone who has ever managed a workforce knows that putting a live, public-facing camera on your staff 24/7 usually creates this paranoid, high-turnover work environment. How on earth do you retain employees when thousands of clients are watching their every move?
That is a great question. It requires a very specific operational culture. You really have to reframe the camera system from being a surveillance tool to being a validation tool.
A validation tool.
Ah.
Meaning what, exactly?
Meaning, For the staff, the Muttcams are a safety net. It actively proves they're doing their jobs correctly, following all the protocols, and delivering excellent care.
Oh, I see. It protects them from false complaints.
Exactly. And for the consumer, it is the ultimate trust builder. Like we said earlier, transparency is basically the main currency of the premium pet market today.
Because you aren't just selling a day of dog care anymore.
Right. You are selling absolute peace of mind. You are proving, literally minute by minute, that the dog is happy and safe. And when a consumer can verify that from their office desk, price resistance practically vanishes.
If the consumer trust is really that high and price resistance is gone, I have to look at the growth trajectory of the business itself.
Let's look at it.
The franchisor has been operating since 2008, but they currently only have 13 U.S. units, with one of those being company-owned.
That's right.
In the franchise world, if you've been around for 16 years and you only have 13 units, my immediate assumption is that there is some sort of flaw in the system preventing scale. Like, why not 100 units by now?
It's a fair question, but it is entirely deliberate. What you are seeing here is a boutique growth strategy, which is fundamentally different from a mass market franchise rollout.
How so?
Well, in mass franchising, the goal is often just to award as many licenses as possible to capture those initial franchise fees, right?
Right, just grow as fast as humanly possible.
Exactly. But Camp Run-A-Mutt has opted to build a moat of quality instead of sheer volume. They are highly, highly selective about who they let into the system and where those facilities are actually built.
So they are prioritizing the survival and the profitability of the individual unit over the vanity metric of having, hundreds of locations on a map.
Yes. And honestly, that strategy is completely validated by their market recognition. I mean, they've been ranked on the Inc. 5,000 list of fastest growing private companies based on revenue.
Oh, wow. That's a big deal.
It is. They are a San Diego A-list winner every single year since 2010, and they consistently sweep regional awards in totally different markets like Georgia, Florida, Iowa.
So the methodical growth ensures that every new unit maintains the exact same premium standard as the original flagship location.
Exactly. They refuse to dilute the brand.
Let's talk about the revenue architecture that actually drives that Inc. 5,000 growth then. The data indicates that most established Camp Run-A-Mutt locations exceed $1 million in annual sales.
Yes, the revenue potential is very strong.
But generating $1 million requires way more than just high daily foot traffic. How is the cash flow actually constructed within the four walls of the facility?
The strength of their unit economics really lies in having multiple interlocking revenue streams. It's essentially an ecosystem.
Okay, walk me through the ecosystem.
First, you have the daycare, which is your recurring revenue. These are the local clients coming in 2, 3, or maybe 5 days a week while they work.
Right.
Daycare provides the highly predictable cash flow that covers your operational burn rate, your lease, your payroll, your utilities.
To use an airline analogy, the daycare is essentially the economy class. It's the sheer volume that covers the jet fuel and keeps the plane in the air.
That is an excellent way to look at it, actually. Daycare pays the daily bills. But the real margin expansion happens when you start layering on the other services.
Like the boarding.
Yes, boarding is the next major pillar. This drives massive revenue spikes around holidays, summer vacations, long weekends.
Because people travel and they need a safe place for the dog.
Exactly. And because the facility's overhead is largely fixed already, filling it with overnight boarding guests significantly boosts your overall profitability.
And what about the grooming component? Where does that fit in?
Grooming acts as the high-margin first-class upgrade in your airline analogy.
Oh, okay.
It's full-service grooming, utilizing certified groomers for everything from, basic baths to really complex breed-specific cuts.
Right.
The brilliance of having it in-house is the capture rate. The pet parent is already dropping their dog off for day care anyway. It is completely frictionless for them to just request a spa treatment before pickup.
Oh, that's smart. You are maximizing the revenue per customer without having to spend any additional marketing dollars to go out and acquire a separate grooming client.
Exactly. Plus, on top of all that, there's the retail boutique and the positive reinforcement training services.
So if a seasonal dip hits the boarding side, the recurring daycare and the retail sales just stabilize the whole business.
Precisely. It's a beautifully diversified asset.
It really is. But And here's where it gets really interesting. Building a diversified asset of this caliber requires serious capital.
Oh, absolutely. It is not cheap.
Yeah, let's look at the numbers. The initial franchise fee is $45,000, which is pretty standard.
Hmm.
But the total investment range sits between roughly $890,000 and $1.42 million.
Yeah, it's a major investment.
And to even qualify, a prospective owner needs a net worth of at least $1 million and $200,000 in liquid cash. I mean, that is heavy-hitting institutional-level capital.
It is.
If I'm a corporate professional listening to this, why spend over $1 million to open a dog daycare instead of just buying a cheaper home service franchise? Say, like a fleet of mobile service vans for a fraction of that cost. Why sink $1.4 million into physical real estate?
It really comes down to understanding the fundamental difference between a low-barrier entry model and a protected asset.
A protected asset. Break that down for me.
Sure. If you invest in a low-cost mobile franchise, the barrier to entry is very low for you, which inherently means it is low for everyone else in your market, too.
Right. Anyone can do it.
Exactly. Another operator can just buy a van, undercut your prices by $10, and completely compete with you tomorrow. You are constantly fighting a war of attrition.
It's the moat concept again.
Exactly. With Camp Run-A-Mutt, your capital is physically building an insurmountable operational moat. You aren't just paying for a flashy brand name, you are funding massive indoor and outdoor specialized build-outs.
Like what, specifically? Where is all that money going?
You are installing commercial-grade synthetic turf that's engineered with specialized drainage systems to prevent odors and bacterial buildup.
Oh, wow.
Yeah. You are building custom splash pads, heavy-duty climate control systems for the indoor parks, and you're installing the enterprise-level tech infrastructure required to stream high-definition video 24/7.
Okay, so it is incredibly difficult and highly cost-prohibitive for an independent mom-and-pop competitor to just set up shop across the street and replicate that level of premium infrastructure.
Exactly. Good luck trying to compete with that on a shoestring budget.
So the high upfront cost is actually an offensive strategy to box out competitors.
Yeah.
It makes total sense.
Okay.
But let's look at the ongoing support for that massive facility.
Sure.
The franchisor provides protected territories, comprehensive training, and ongoing operational support, all for a standard 6% royalty and 2% ad fund.
Standard numbers, yeah.
But the corporate team only has 7 employees at headquarters. As an investor putting up over $1 million, a 7-person corporate team supporting 13 active U.S. units sounds like a massive bottleneck. What happens when my custom waterfall breaks or my scheduling software goes down?
It might sound small, but it is actually a strategic advantage if you look at the ratios.
So?
Well, think about a massive franchise system with, say, 1,000 locations and 50 corporate employees. The ratio of support staff to franchisee is heavily diluted. You are often just a ticket number in a vast corporate maze.
Right, you can't get anyone on the phone.
Exactly. But here, a lean 7-person headquarters supporting 13 units means the ratio is incredibly concentrated.
Wow, it's virtually a 2-to-1 ratio of units to corporate staff.
Correct. You are getting highly personalized, high-touch support directly from the founders and the core team who actually engineer the brand from day one.
That's a huge difference.
It is. Furthermore, the technology stack they utilize automates a significant amount of the back-end operational heavy lifting.
Which frees up the humans.
Exactly. It allows the corporate team to focus on strategic support, marketing optimization, and high-level troubleshooting rather than just getting bogged down in mundane administrative tasks all day.
Okay, that makes the infrastructure side clear. You have the capital, you build the physical moat, and you have this really tight-knit corporate team in your corner.
Yep, that's the foundation.
But we really have to talk about the person actually holding the keys. Owning a business of this scale is not a passive spreadsheet exercise. We are talking about a 247 operation in a hands-on service industry.
Very hands-on.
What does the ideal operator profile actually look like? And how do they handle the reality of modern staffing challenges? Because finding people to reliably work an overnight dog shift is a significant management hurdle.
If we connect this to the bigger picture of service-based franchising, you're right, this is absolutely not an absentee set-it-and-forget-it investment. And the brand is extremely transparent about this from the start.
They want you involved.
Highly involved. They're looking for owners who are prepared to be the face of the business in their local community.
And the staffing piece.
The staffing challenge is very real in any service industry today, but it is heavily mitigated by the brand's rigorous operational systems.
Meaning you aren't figuring it out out on your own.
Exactly. You aren't inventing the hiring protocols, the training manuals, or the retention strategies from scratch. The franchisor provides the exact blueprint for how to recruit, train, and manage a staff that can execute these safety protocols flawlessly every single hour of the day.
It really requires a leader then. Someone who can standardize a highly emotional service. Because pet care is inherently emotional, you know? People view these animals as literal family members.
It requires an operator who respects systems, respects safety, and knows how to build a really strong employee culture. But, the flip side of all that operational rigor is the inherent joy of the product itself.
Yeah, you're working with dogs all day.
Exactly. The brand's messaging captures it perfectly. Imagine the joy your one dog gives you, and now multiply that by 60 and make it your actual career.
That's a pretty great pitch.
It is. For the right investor, building a team that gets to spend their days caring for animals and providing absolute peace of mind to the community, it isn't just a revenue stream, it is a highly fulfilling calling.
It bridges that gap between strong unit economics and actual day-to-day lifestyle satisfaction.
Yeah,
You're building a true community staple.
exactly.
So let's crystallize the core value proposition here for the listener. Camp Run-A-Mutt is offering a highly differentiated, 100% cage-free premium model.
Yep.
It utilizes a methodical boutique growth strategy to ensure quality, which creates a powerful physical and technological moat in the local market. It leverages interlocking revenue streams, the daycare, boarding, grooming, and retail, to drive strong revenue potential that frequently exceeds $1 million annually. And it is all backed by a high-touch, highly concentrated franchise support system.
I mean, when you lay it out like that, it is a highly sophisticated, multi-layered business operation that is brilliantly masquerading as a giant, joyful dog park.
That's the perfect way to describe it.
For an investor with the required capital who wants to completely dominate the premium tier of their local pet care market, it offers an exceptionally compelling architecture to achieve that goal.
Absolutely.